Learn the art of investing on Moneywise.
Hello and welcome to the Moneywise Podcast brought to you by Bandhan Mutual Fund. I'm your host Mishuk and today we are talking about index funds. To help us understand what index funds are and why they matter, I'm joined by Mehul Shah and he's a designated partner at RIQR LLP. He's been in the business for over 20 years and believes that investments should be planned around time and comfort, not just returns. His firm follows a clear philosophy: right investment and quality returns. So, Mehul, thank you so much for joining us. It's great to have you on the show.
Thank you for having.
Great. All right. So let's get straight into the questions. I'm sure our listeners will be interested to know, why did you choose to become a financial advisor and how did you first get into investing?
Initially, when I started my business 20 years back, at that time, this industry was pretty new, the mutual fund industry and the finance industry as such. Basically, there were traditional means of investing, mainly bank, FD, PPF, that type of source of investment were there, KYP. So this type of investing mutual fund was totally a new concept to many of the people around me and in the city where I live. So what attracted was a complete new source of investing, which was more professionally managed and better documented than other non-professional means of financing and investing. So the main attraction was this whole scenario which was there. And the main thing which attracted me along with all the investors was that everything was documented and available to the client as and when required. So there was nothing to hide. If in case of any statement or anything that a client wants, client can also access that and we can also access that and give it to client. The transparency was there.
Well, I must say that's a really interesting start. And what really got me interested is the fact that you started from a time when mutual funds weren't the norm in smaller towns. I mean, it's actually great to see how you turned that gap into a long term business model.
Yeah, because at that time the awareness was less. So I thought let's make more and more people aware about this kind of investing. And people were also not very happy with the traditional means of investing, particularly bank FD, because the returns were not that much. So this acted as an alternate and attractive tool to many clients at that time.
So, moving on to the next question, I'm really curious to know what got you interested in index funds, and if you could explain what they are in a simple way.
Initially, what when I got attracted towards index fund, or what made things curious about index fund, was actually the simplicity or the simple process of it. Like basically, you know how investing can sometimes be very complex scenario, and sometimes people don't understand it because there are many alternatives, options, various risks factor involved. So normally people find it a bit complex, but index fund there makes a difference, whereby basically it is more simple. It tracks the market index, so such as Nifty 50, Nifty Next 50, and the broader one such as Nifty 500 also. So instead of just fund manager handpicking some stocks and trying their level best to outperform the market, the index fund tries to match the market performance, and it mostly buys all of the things, or you can say even most of the things which are available in the market in index form. So, for example, if you invest in Nifty 50 index fund, you are essentially investing in 50 biggest listed companies in India. And this idea as a whole, like if you see in index term, your investment also grows along with it as that index grows. So that's the main reason we get attracted, and even client gets attracted towards index funds.
Mehul, that explanation really simplifies it. I think a lot of people get caught up in the idea of picking the perfect stock,
Correct.
and index funds help you avoid that stress.
Very true.
And having said that, let's explore that a bit more. Um, if you can educate our audiences, why do you think index funds are becoming so popular these days?
Basically, earlier the index fund acted in the background. More people were not aware of it. But along the time, the option of something investor actively choosing this has now become bit normal. Like the first major advantage that people get in this is the cost. Means the cost that is associated with index fund is pretty low, so which helps people get that their mindset is that the expense ratio which is there in this index fund is low, and you can say client does get attracted towards this. And why it is low, that also I'd like to tell you, because there is no set team of people like analysts or managers working in the back end and researching stocks, selecting stocks, because all that headache is not there. So due to this, the expense in this particular fund is also low, so which attracts a lot of clients. And then second thing is there is clarity, like the clarity of where you are investing and what are you expecting out of that investment. So for example, if you are investing in Nifty 500, then you are having the clarity that yes, I am holding the top 500 companies basket. So that assures transparency also, and it gives over a longer period of time consistency also to the client, because they are aware about the investing strategy and what are they into, so which help lot of clients in simplifying their investment journey.
That's really interesting to know. In fact, in my personal opinion, it makes investing feel a lot more, you know, for lack of a better word, accessible. And that brings us to something really important, which we'll deep dive in the next question. As you know, there's always a debate between active and passive investing. What's your take on that?
Yeah, you are correct on this. Like many people debate and have different opinions, but what I believe is there is no question of debating it. You can just tell it is a two sides of the same coin, or you can say it is just two tools in your own toolbox, because both play important and valuable role in investing. Like for active investing, it is great and good for people who are looking to capture specific opportunities, and where they are looking for skilled fund managers who are really good at what they are doing. So for that type of people, active is still an interesting option of investing. But for passive investing, it is all about more about consistency, clarity, lower cost, and it is getting you an opportunity to move along the market. So for this type of people, the passive category is more attractive and efficient for them. But if you say in to create a balanced portfolio and to have an equal and equilibrium investing methodology, to keep both the things, active and passive, in your portfolio is equally important.
I like how you framed it, two sides of the same coin. It really does come down to the investor's mindset and style, like whether they're looking for
Yes.
expert management or want to follow a simple market trend. I think there's space for both. And so, thinking about different types of investors, who do you think should consider investing in index funds?
Basically, what I believe is a set of investors or client who are basically about to start their investment journey. For them, it is more ideal, and so that you don't have to track and worry about your investments every day, because there is a pool of stocks or theme which is already present. So you have to don't track your investment every day. The cost associated is also low, and due to this, your portfolio remains diversified. So for the first time investors, it is very easy to track and understand their own portfolio. And for other set of people who are having long-term goals and basically retirement goals, or say for example children education goals of 10-15 years, and they don't want to check their portfolio on daily basis, for such people also index funds are ideal for investment.
That's a great point. And we're almost at the end of our conversation. And before we wrap up, do you have any final advice for our listeners? Something you think every investor should keep in mind, whether they're just starting out or already on their journey?
Basically, what is important is, as we have spoken earlier also, that an equal and equilibrium balance in the portfolio is very important at all levels.
Hmm.
To manage risk is important. To have clarity of thoughts of the reason for investing, your ultimate goal that you want to achieve at the end of your investment cycle, the time horizon of investment is important. And basically, not to chase percentage returns, not to track the past returns. Try and invest keeping in view the holistic view of the markets, and to basically have an understanding of your own investment, which is very important.
Well, Mehul, that was a really insightful conversation, and thank you so much for breaking down index funds for our listeners in such a clear and relatable way. To our listeners, if you have ever felt confused about where to begin, index funds might just be the simple starting point you need. If you found this episode helpful, don't forget to follow or subscribe to the Moneywise podcast. We'll be back with more conversations that make investing simpler, smarter, and more approachable. Until next time, stay curious, stay consistent, and stay Moneywise.
You're listening to Moneywise, brought to you by Bandhan Mutual Fund. Check out the rest of our series for more insights on investment and personal finance. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.